Hey, what is up, everyone? Welcome back to Market Psychology 101, where we look for value in the markets when there's fear and are cautious when there's greed. In today's video, we're going to be taking a look at earnings reports for some stocks from this week, as well as going over chart analysis of the S&P 500, of some of the AI 5 or Magnificent 7 stocks. So let's get into it. Here on CNN, Fear and Greed, we're still in the neutral territory. So market hasn't quite decided whether or not to feel overall greedy or fearful. There have been some corrections in some of the top stocks. And on pie vesting, you can see overall it is still up in high greed, though you can see there is this overall trend that's going slightly downwards with some corrections in there. So wouldn't put too much weight into it right now. But when you look at some of the charts, a lot of stocks are looking a bit overvalued, so maybe some volatility corrections are coming up soon here from August to October, as it has the last few years. So some notable earnings reports for this week. We'll take a look at BlackRock, maybe even Goldman Sachs, Bank of America, a lot of important bank stock earnings reports. BlackRock, if you don't know it, I believe they manage something around 20 trillion or 40 trillion. I forget. I'll have to look that up. But largest asset manager in the world. You got, a lot of banks. Synchrony, U.S. Bancorp. You have Johnson & Johnson. Curious to see how they've been doing since the COVID days. Domino's, Taiwan Semiconductors, NFLX. That one will be important for us to look at. We'll try to run through a few of these. Not too many, but just get a general feel for how are the bank stocks doing right now, and maybe some of the other notable ones that we are aware of. With crypto as well, you guys can see that overall, at least on this rainbow chart, I do a video on that once a week, usually on Tuesdays. You can see that overall, the rainbow chart says we still have decent value here, but if Bitcoin starts to run up into these orange or red bands, that is typically a good time to sell. So we'll see if that's coming up anywhere in the near future. Again, I do videos on crypto every week. So starting off with the S&P 500, drew a couple trend lines here, and of course you can see this channel we've been in since the great financial crisis after 2008, as we've been traveling up. Within this channel, you can see this has been the highest part of that range it ever reached. After COVID there in 21, also 2014. And when it has these peaks to around that dark blue line's the 200-week moving average, or when it has these dips, I should say, that can always be a target to look for in the most bearish of situations. But right now, as we recently look at where the S&P 500 is going, you can see we also had this parallel channel from this peak back here in August, broke above that. Wouldn't doubt if we came back to test it, and then possibly my next target somewhere around 6,000, 6,100 for the S&P. And in the most bullish of situations, if you're wondering where's that upper range here, and obviously it's not going to go straight up, so we'll stretch this out a little bit. If that were to happen later this year, that would be 65, 6,600. We'll see though, but my next target I'm looking for something a little over 6K or 6,100, should things continue to be bullish. And one of the ways you can measure that is the VIX. This is the volatility index. And historically speaking, we are at pretty low volatility, so things are overall doing well. I do have this RSI displayed down below. You can see we're on the weekly, and overall, you can see that there is some base strength on the RSI. We're possibly getting ready to go back up. I would not be surprised. Since 2000, most years between August and October have been bearish times where there's been corrections. We've had that the last few years around October. But if the VIX is ever getting above 25, that tends to be a good time to buy, typically for stocks as they correct. So just keep an eye on that. Another thing to keep an eye on is the U.S. 10-year versus 2-year. This is the yield curve inversion. Once they cut rates, usually within a month or two, this uninverts. And when it uninverts, there's a couple things for you guys to keep in mind. Rate cuts aren't always a good thing, or at least in the immediate, short, medium term. rate cuts aren't always a good thing. Usually they do rate cuts because something somewhere is broken, and it's not to be nice and help us all get rich, but it's because conditions in the economy are getting so bad. So there is data evidence to show economic contraction starting to pick up across the states, as well as unemployment rate. You can see right there it's gone above 4%. So something I notice here with the yield curve, and this is the most important one in my opinion, is that it broke above this trend. It tested it a couple times and then finally broke through. So I'll be curious to see what it does around the 200, and typically once it gets above zero and it starts continuing to go up, those are times to be careful. With crypto, how's crypto looking today? So you can see here, we had a couple of these months, about 4 or 5 weeks, where we went red with Bitcoin, and you can see these moves down 20-ish%. That's been the typical correction from the bottom here. That's probably the biggest one, around 23%. But you can see this is nothing new. This whole entire way up, we've had 20-ish% corrections all the way since the bottom. Again, it's always been around 20% here since this bull run started down here. So another 20% correction. Some people obviously have been buying. If we zoom in on the daily, what do we see? Sorry, I know there's a lot in the way here. Maybe let's delete our fib so we can see things clear. Overall, we are in this slightly descending channel. I am worried about possible bearish divergence, or things just being bearish, because overall the RSI is going down. This trend line, Bitcoin's been in love with it since the very bottom. You can see here it keeps bouncing off of it, going up, riding up this trend line. And yet again, as soon as it got under this trend line, and it's kind of similar to the bull market support band, it's riding it back up. So maybe it'll come back down, test the 50 or 100-day moving average and go back up. I think the 70,200 level, somewhere around there, is going to be very important. If it breaks above that, some of my next targets for crypto overall, this is a trend line all the way back from the 2021 bull run, around 92,000. So 92, I think 84 was another number that I was looking at as well. Don't want to get too long-winded into crypto, but yeah, watch this 70-200 line around there, and then next, 84 and 92, as we said. So let's get into the Mag 7 stocks, see how we're doing. So NVIDIA, you can see right there, came down to the 50-day moving average. We're on the daily time frame. If you're new to TradingView, you just click the 1 year, puts it in 1-day intervals. And overall, on the RSI, is looking bearish. Maybe it's going to get down to this oversold area before popping up. So if it did come down somewhere around 100, 103, wouldn't be surprised. But let's take a look how common this is. So when it tests the 50, overall, that's been one of the most common bounces. It does come down to the 100-day once in a while. You can see back here, this was 2022. Yeah, that was the best time. Obviously, it was around $12 to buy in back there. But on the way up, it's had a lot of bounces off the 50 and the 100. So we'll see if those moving averages can hold. And here, yeah, you can see on the weekly, definitely some bearish divergence. So higher prices and lower in the RSI, it is a little bit. Doesn't mean that it can't run up more. But if things got really bad, or, watch to make sure that NVIDIA stays above this 20-week moving average. 50-week, in my opinion, with any asset is like the ultimate area to not only dollar cost average in for higher value, but to see a bounce or things go under, if we're getting a reversal of the trend, staying bullish or going bearish. 50-week is a good way, in my opinion, to measure that, or around the 200-day. They're both kind of similar. Microsoft, things looking similar. Again, you see lower on the RSI, bearish divergence. So lower RSI, higher price. That's what bearish divergence is. But, again, you can take a look at it since back here. Lower RSI, higher price, because you have bearish divergence doesn't mean things can't keep running. On the daily, similar to what we said with NVIDIA, though for Microsoft, it is coming down to the 100 more often. You can see all these taps off the 50. So possible bounce area to look at for Microsoft would be around 426 if it gets down to the 100 there. And Apple, I think Apple is still the largest market cap stock in the world. I believe it's Apple, Microsoft, then NVIDIA. Apple came down to the 20-day moving average, also right on this macro fib. I drew this fib retracement from the prior high to the next low, and overall it's come back down to that 1618 at around 222. So maybe it's going to get a bounce here. That's some good support at the 20, this macro fib at 222. Next area, should it bounce and continue higher, target-wise would be 258, in my opinion. But if things did get more bearish, then on the daily, you do have some price structure here, and the 50-day moving average kind of around 210. So that could be an area to watch for. Amazon hitting the 100, and as you can see, since, we've tapped it once, twice. We haven't gone underneath it since last October, November. This is what I was telling you guys about again with August to October. Somewhere in there since the year 2000, things can get more volatile and go down a bit. So the 200-day moving average tends to be a decent time to dollar cost average. And, even if you're a monthly Amazon investor, right here, the 100's not looking too bad. And also the RSI on the daily is getting close to oversold. And you can see how quick in the past it is typically reversed up. When we start turning green, I'll put on the buy sell signal indicator again. One of them, the UT bot alerts or the 1020 MA, look for those green dots. But right now it's just going down. So there is some price structure back here, and we're at the 100. So possible area for a turnaround. And over here, again, bearish divergence. Here is bullish, here bearish divergence. So, watch for this fib in the 50-week moving average, maybe at worst, 166, somewhere around there. Google overall, just one red candle there. Let's zoom in on the daily. What do we notice? Again, just bouncing off the 50 there. 50s, if you're taking a monthly dollar cost average approach or even bi-weekly with Google, you have these moving average levels. Look for more value there at the 100, the 50. So at the 50 here, it's holding. If it gets under, the next area is 168. And Meta, you can see here, also down to the 100 as well. So that's only the, let's see, 1, 2, we're going back here a little bit, at least in the last year. Overall, Meta has only come down to the 100 once, twice, 3. This is the 4th time in the last year. So typically the 100 has been one of the, on average, best value times to put in a little bit more. But you would want, of course, you'd want Meta to hold this. If it goes down to the 200, we have not been there for Meta on the 200 moving average. Here it broke above it when it was resistance since February of 23. Obviously things are very bearish, but since the bull trend started, it has not come down to the 200-day. So that will be critical if it gets down to the 433 area. Let's take a quick look at Tesla, and then we'll go into some of the earnings reports from this week. Tesla, it had that nice run, about 10-ish green days straight, and then it's settling here at the 618 at around 243. So if Tesla starts to come back down to earth, you see overall we had this big trend line coming down from these peaks too. If it gets anywhere near this number around 227, I wouldn't be surprised to see it bounce. But if it did go lower, you have all this support here, the 50, the 200, the 100, the 0.5 fib, all at around 205. That'd be a strong area to look for some possible bouncing or support. So let's start off with some of these bank stocks. There's too many large ones to ignore. So Goldman Sachs and BlackRock. Let's see how these are doing overall. Let's zoom out a bit. And Goldman Sachs, so you can see here, this is overall looking pretty bullish. And drew a fib on this one a while ago. I haven't talked about it probably since the last earnings reports, but that 1618 fib at 517 would be my next bullish area to target there for Goldman Sachs and BlackRock. So as far as banks, those are looking overall good. BlackRock has not revisited that high since November 21, and it keeps challenging the 786 fib here at around, sorry, I'm trying to see what that says, 847. So it's just a touch underneath that. And BlackRock, should it get above that 847, you'd be looking at revisiting the prior highs at around 976. But overall, BlackRock just having some sideways action here between the 618, 786. Might this be the time it starts to continuously get above and stay above? We'll see. Moving on, Bank of America, BAC, and Bank of America. Also, kind of a similar looking chart to BlackRock here. If we draw a fib, I'll show you guys how I do this. Look for the macro prior high and prior low. And I also, because we're looking in between the last two prices, make sure it's on log scale. Take it off log scale if you want to look at some extended price targets. But right here at the 786 at around 43, where we're at right now, it's possible it does get some resistance, come back down to the 20, testing on, kind of like we saw in BlackRock's chart. So overall, these bank stocks looking pretty good to me, looking bullish. RSI on this one looking bullish as well. Any others we want to look at here? And yeah, I wanted to look at Johnson & Johnson, JNJ. I'm sure this stock did very well during COVID times. Yep. And since that peak in April of 22, Johnson & Johnson's just been coming down. And so inversely, what do we see? You know, if you like Johnson & Johnson, you use their products, you like their products overall, you know, we did make a low back here. So is it possible we keep going down further? Absolutely. Just looking at some areas where there's price structure back here. So you can see where as far as we got down kind of matches up with some price structure here, here, here. You know, there's a lot to support it there. And the next area to below it, in my opinion, probably be around here at 133. You can see that's where it got down to at the 200 MA. There's some price structure breaks back there as well as there. Yeah, probably low 130s if things continued to get bad. We can also take a look at the monthly because it's underneath the weekly. The monthly, what do we notice? It's at the 100-month moving average between there and the 50. We got this long-legged doji. Now, one way I look at finding possible great value for stocks, again, if it's something I've researched and I really like, I look at some of the laws of averages as well, as far as looking at, okay, how often is this stock that I really like at this value? You can look at its PE ratio, price to earnings ratio. It's kind of similar to what I'm talking about here. I think this is an even simpler way. But if you look at the moving averages, okay, Johnson & Johnson hasn't been here since, look at that date down there. It says March of 2020. We all know what was happening then. And it has not been at that much value since that time. Also back here, July 10th, so this is great financial crisis. It got underneath. Only time it got underneath in the last 15 years was the GFC. Otherwise, in the last 15 years since that time, Johnson & Johnson, the lowest value you're able to get it at is that 100-month moving average. We have to go all the way back to 1984. So historically speaking, this is a pretty good, great actually, long-term value time to buy. So if you like Johnson & Johnson, I'll show you one other thing I do. We can go here at Market Watch, take a look at their balance sheet. Okay, you go to financials. Again, I just want to show you guys the simplest, easy way you can look at some of these things. Okay, you can get more into the weeds, obviously, but what are their current assets doing? Okay, it's kind of gone up and down a little bit. Would have to do some research why that is. Current assets around 50 billion. Total assets, same thing. Trend came down a little bit. Wondering why that is. Total assets 170 billion. So we have 50 and 170. What are their total current liabilities? a little under 50. So the ratio, I always want that ratio to be above 1. If it's underneath 1, it's more risky. And you have to watch out during recessionary times, because those companies with a 1 or less ratio, they don't do so well when a recession hits or during volatile times. Total liabilities around 99. So that's about almost a 2 to 1, probably 1.9 ratio. That's pretty good. I like when anything's above 1, especially when it's around 2 or higher. That tends to be pretty good asset to liability ratio. So Johnson & Johnson, some possible great long-term value, but again, here at Market Psychology, we talk about finding value when there's fear. And if you are to possibly buy some Johnson & Johnson stock, do know there's no guarantees. And if you like it enough after all the research you do to get it here, then you need to love it when it's here. Not freak out, whine like a baby, like, oh no, it's a lower price. That sucks. Yes, it sucks. Here, we're not looking at trading, we're looking at investing. If you like a stock enough, this is one you believe in, you like it here, you need to love it here. And hopefully, that doesn't get any lower than that. Like it did, only 2 times in the last 40-ish years. Okay? Pretty rare time to buy. All right, let's move on. Sure, some of you guys are like, what the hell? I did not come here for Johnson & Johnson. But those are the things I want you guys to look for so you can be excited. Any others? I think I wanted to look at, let's take a look at Netflix, Domino's, maybe TSM. We'll leave it there. All right, Netflix, NFLX. Let's see how Netflix is doing. All right, so we did draw this macro fib, and it is testing the prior highs in November 21. Okay, Netflix, man, late 22. I know some people who got in on some Netflix there at around 184. Man, they're loving life right now. It's over 3x, but something to watch for. Look at this RSI. How high is it going to go? Are we going to break the prior highs? You can see here, higher price, lower RSI. Big bearish divergence, fell off a cliff. If RSI only tops out around here, it's possible we could see, another correction in Netflix. So if it does break above, I'll show you how to do this here. Again, take your fib off log scale. Where's the 1618? At 1,030. And guys, do keep in mind, plus minus 20 probably, because my fibs aren't drawn perfectly. But 1,030-ish would be my next major target should Netflix be able to break above. But if things, right now it has that rejection, areas to find support, 587, 556. I would be betting more on the high 580s to see a bounce. Domino's Pizza. We have some we have some different stocks. What is this? In the UK? Let's make sure we're finding the right ticker. DPZ. Here we go. Domino's Pizza. Maybe they're owned by another country, and that's why it's coming up there. So Domino's Pizza on the weekly, man, look at that. Came, I'm not totally convinced this is the right ticker. There we go. Right. Not any different, but funny how TradingView does that. Sometimes it tricks you a little bit. So Domino's Pizza, resting on the 50 wick down to the 100. RSI is also showing oversold as well. So you don't want to catch a falling knife. I'd wait for this thing to show some better price structure, stabilize a little bit. So oftentimes it can show you back here. Case in point, when stocks, not Apple, at least not always, get oversold in the RSI, it's not the first time that it gets oversold, but the second or third time that it really gets lower. And you can see that back here. So I wouldn't buy necessarily that initial dip. Maybe you can dollar cost average in some. But if you're waiting for deeper value, yes, is it possible it could bounce and come up? Of course. But, be ready for possible lower lows as well. So we got that going for Domino's. I'd wait a little bit TSMC. Let's see how Taiwan Semiconductor is doing. And I typed in the wrong chart. Oh, TSM. That's why. Taiwan Semiconductor. All right, so had a breakout recently. You can see here, tested the fib, finally broke out. May come back down to the 20 at around 155. Okay, but it's very bullish, very extended right now. And let's make sure our fib's off log. And next target, 197. Should things keep going bullish for Taiwan, I would expect to see some volatility there. It's possible we already have, people don't always have to wait for the exact fib to be hit. See here on the daily, you're hoping to get a bounce off that 50, but don't be surprised to see a little bit more of a battle there around 197, 196. So anyways, things overall in the stock market, a little bit of a correction recently. We'll see if we get another healthy bounce or if things possibly get more value. And also Johnson & Johnson showing pretty good long-term investment potential value where it's at. Again, no guarantee it can't go lower. Cintas, guys, I don't want you to forget about this one. It's one of those companies you see everywhere, and not everyone, how should I put this? Some of you might work with them, contract with them, but this is one of those stocks where, goddamn, it looks like Microsoft or Apple. It's just, or Costco, Garmin, some of those better stocks where they just seem to go up forever. So Cintas, one to watch for. If we do get volatile times, this would be one where, if it's getting down to the 100 or 200, tends to be pretty good value times to buy. Anyways, guys, hope you enjoyed the video. Hope you enjoy your Friday. Have a wonderful day and a wonderful weekend. Take care.